Hello, everyone, and welcome to this weekend's edition of Stock Market Timing Television for Sunday, October 9th, 2022. Let's start off by wishing everyone in Canada a happy Thanksgiving. We celebrated Thanksgiving last night, had the big dinner, so guess what? We're having turkey leftovers tonight. Now, if you're a long-term investors, just one thing of importance happened last week, and of course, if we're still watching the Fed, if the Fed is still controlling things, their biggest concern is inflation, and what do you know? Well, crude oil prices shot up over 16% for the week, and that meant money went back into the energy sector, with the TSX Energy Index up 14.97%, the Spider Energy ETF up 13.58% on the week. So lots of money moving back into the energy sector. Otherwise, none of the other mega trends changed at all. We still got the US dollar index. It actually closed higher on the week after dipping down to the upper channel line. Now, that big dip brought money back into the gold market, and gold lost some of its gains going into the close, still closing the week up a little over, tick over 2%, closing at the lower channel line. But we are still in a long-term downtrend for the price of gold. That has not changed. Now, we're also in a long-term downtrend for the price of copper. We entered a sell signal back in the spring of this year, and that has not changed. So if copper is our global economic barometer, we're not seeing any change there. Then looking at bonds closed lower on the week. Didn't make a new low, but closed lower on the week, and that put upward pressure on bond yields. So that story has not changed. Then, of course, sectors that are highly correlated with interest rates. We saw real estate stocks get hit hard in the U.S., down over 4%, making a new low. Canadian real estate stocks were down just 1.44%. Now, the opposite happened in the utility sector, where U.S. utilities were down 2.67%, making a new low for this move, while Canadian utilities were down 3.91%. So the sector where widows and orphans usually hide is getting slammed right now. I have never owned a utility stock, so it's not a sector that I watch closely. Next up, let's take a look at the Fear Index, or what's commonly called the VIX. And there's a daily chart of the VIX, and it had come down on Monday and Tuesday, and by Wednesday it actually closed below the lower channel line. In a bull market, that's a good reason to get excited about stocks, but in a bear market, you have to question it, especially when it does not look like the pros are about to give up control. So that was the right thing, the right opinion to have as the market turned around and continued to move lower on Thursday and Friday. And the VIX moved up, closing just above our 31.25 price target. Next target is 34.38, and that's where we peaked back in late September. If we take that out, our next target is 37.50, and that takes us back up on the weekly charts to where we were, where we peaked back at the start of the year. Now, if we're going to get an October crash, that should take the VIX back up to the 43.75 level. Now, looking at our weekly chart, the VIX closed slightly lower on the week. It is still trading above the upper channel line, so we're going to remain long-term bearish on the market as long as the VIX does not close below 23.92 this coming Friday. And of course, if we don't close below that level, the lower channel line is going to continue to move higher weekly. Now, looking at the VIX futures contracts, all I can say is that they're not hedging for a stock market crash, and they're not hedging for a stock market rebound. Going forward, there's very little change in the value of the VIX going into 2023. So we're really getting a neutral reading from options traders right now. They really don't want to be overly bearish, and they don't want to be overly bullish at this time. Let's take a look at a couple of daily charts. And, I've been talking about the fact that the stock market is being held up by a couple of stocks, which included Apple. And in this week's rally that we saw on Monday and Tuesday, Apple did not get back on a buy signal and came back down on Friday. That's also true for Tesla, which lost a lot of value this week, including another 6.32% on Friday. We are heading down to 218.75. That's our next target. And if things continue at this pace, we should be able to hit that on Monday. Then you've often heard me poo-poo the Intel as an investment opportunity or a trading opportunity. In the last 52 weeks, it's down over 50% in value. And there it is, sitting right at the recent lows. Well, a stock that I do love and follow daily is AMD, and it was down hard on Friday, down nearly 14%. So if you're still short AMD, congratulations. You can see that we traded up for a couple of days but did not generate a buy signal. And on a year-over-year basis, we're down 44.17% so far. So that's not a pretty picture. You know, if things are going to turn around, we want the chip stocks to do well and chip stocks to lead the technology sector forward. That's not what's happening right now. Let's finish off this weekend's presentation looking at some downside targets. And we're going to be looking at weekly charts. So this is long-term targets, not daily targets. The first thing I would look at is at the flypaper channel to see where we are. Is the flypaper channel going to act as support? Well, back in 2021, that's what we were looking for. But in early 2022, things started to break down. And once we broke down below the flypaper channel, you no longer look at it as a potential area of support. Now you look at it as a major area of resistance on the way back up. Then, of course, we can look at the moving averages, and right now we're sitting on the 200-week moving average, so that's not a potential area of support. That is the area of support we're dealing with right now. If that breaks, of course, we've got some room on the panic zones, but of course, you get panic selling by pushing through the bottom of the projected trading area. So far we're down at the bottom of the projected trading area, but we haven't broken through it. If you look at the left-hand side of the screen over here in the bottom, you can see what panic selling looks like. And so that could certainly happen in October. That's seasonally, this is the time of year when you would expect to see some panic selling. So mathematically speaking, what are we looking at? Well, the first thing we're going to look at is the fact we haven't broken through the summer lows just yet. And of course, with energy moving up so much this week, that is helping us hold those summer lows. And if gold and crude oil continue to move higher from here, we might not break the summer lows for the indices. That doesn't mean individual stocks won't break them, but the TSX 60 may be able to hold the summer lows. Let's say we come back here next week and we've broken those, then 17,500 is our first target, followed by 16,250. I always tell you to look 2 lines up, 2 lines down. That's your playing field. So right now it's 17,500 is our first target, which only comes into play if we break the summer lows. Looking at the S&P 500, well, the first thing you should notice is the high, the lower high, the lower high. That's very bearish, and now we're making a lower low. So flypaper channel is not going to be a projected area of potential support. It is now an area of projected resistance. Is the 200-week moving average going to help? Well, we've broken through the 50, the 100, and we've broken through the 200. So we haven't broken away from it just yet, but we are projecting lower prices from here. And you can see we're down at the bottom of the panic zone. So October is the time and place where you expect to get panic selling. And the first target is 34.3750, followed by 31.25. Of course, if we start heading down towards 31.25, a lot of people are going to be bringing up the big round number, which is 3,000. So let's see what we do at 34.3750 to see if that holds or not. Then looking at the NASDAQ 100, same situation, lower highs across the top. Now we're starting to set up for making lower lows. We haven't done it just yet. The 200-week moving average is not a potential area of support. Panic zones, no major area of support there, as we're already down at the bottom of the panic zone. So if we start breaking down and see panic selling, we could head down to 10,000, which is certainly a big round number. Now, looking at a stock where the flypaper channel is still acting as support is Apple. And we're right down at the bottom of the flypaper channel. We're oversold at the moment. We're at the 100-week moving average. We could certainly move down to the 200-week moving average if we take out the summer lows. And if we take out the summer lows, my big target, which if you were following us earlier in the year, was 225, which we did not get to when we had the big dip during the summer. So 225 and then potentially $100, but we've got to break the summer lows first before that happens. Now, a stock on the other end of the scale is, for example, is Shopify. Shopify got crushed earlier in the year, hasn't got up off the floor yet. So the flypaper channel is continuing to move lower weekly. There's no sign that Shopify is going to get up off the floor anytime soon. So if it does, of course, the moving averages could come into play as potential areas of resistance. The first thing that would excite me about this stock is if we took out the high from a couple of months ago. That would certainly tell me that something new is happening, but that has not started. We're still projecting lower prices here. We're at the bottom of the panic zone, so that's not a potential potential area of support, but we have been trading sideways, and our next mathematical target on the weekly charts is 25. But if you split 25 and 50, you come up with a target of 37.50. That's what you should see on the daily charts, and that's where we're holding right now as we closed at 37.35 on Friday. So it's the daily target, or halfway between the two weekly targets, is acting as support right now. If we start breaking down, especially if we start breaking down below $30, and $25 is going to come into play. Okay, folks, that is all for this weekend's presentation. Nothing bullish to see here. Still looking to see what happens in October if we start breaking down, if we get a stock market crash in October. Of course, things could change on a dime. Putin could give up and withdraw his troops. That would certainly help the stock markets turn around and put a damper on energy prices and inflation overall. But that has not happened yet. Enjoy the rest of your weekend. Next time you'll hear my voice is on Tuesday morning.